If I enter into a trade, when Bitcoin goes up 1%, I'm not going to be making 1%. Instead, I'm going to be making a 20% gain because I did it on a 20x leverage. If I decide to do it on a 10x leverage and Bitcoin goes up 1%, then I made a 10% gain. In other words, you are gaining 10x or 15x or 20x the amount that you set it at. Hey everybody, Teddy here, and in today's video, we're going to be talking about futures trading on Kucoin, also known as trading on leverage. Trading on leverage can increase your rewards, but it also comes at a cost of increased risk. So in this video, I'm going to be sharing everything that you need to know, how to manage your risk, and whether you should trade or not. So if that sounds interesting, definitely stick around. If you're interested in signing up, I do have a referral link down below. If you do use my link, you can get up to a $500 bonus. And right now, Kucoin is doing a $10 million prize pool giveaway. Definitely check out the link down below. Also, before we begin, I do want to emphasize and share that nothing that I share in this entire video is financial advice, nor am I a financial advisor. This is only for educational purposes only, and hopefully this video can help anyone out there. Now, the first thing that you're going to need to do is deposit USDT into your account. You can also send over Bitcoin or Ethereum, sell it into USDT, and that will work as well. If you have no idea what I'm talking about, then this video is definitely not for you. Trading on leverage or futures should be for only experienced traders only. Of course, you have to practice a little bit, but definitely start with a small account first before you consider a large position. Now, once you have USDT in your main account, you're going to go ahead and click on transfer. Then you're going to select futures account and you're going to swap that because you want to send crypto from your main account into your futures account. The amount that I'm going to send over, just for this example, we're going to just work with 100 USDT. Click on confirm. And then now we're going to go ahead and click on trade. Now, Kucoin's futures trading platform is a separate product from its regular spot trading platform. On the top left corner, you see only Kucoin. If you go to the futures product, it says futures. So make sure that you're on the futures if you plan on trading on leverage. So right now, Bitcoin's around $20,213. So I can enter a limit order for a lower price for my order to get filled, or I can click on last and it'll paste the current price of Bitcoin into the limit order box. Next, you're going to decide how much do you want to trade with. Right now, I have 100 USDT in my futures account. Do I want to trade with 25% of that, 50%, 75%, or 100%? Or I can enter a price manually. But for now, let's just choose 50%. Next, this is where I'm going to spend a little bit more time. You're going to trade the leverage amount. It's automatically going to be set to 5x, but you can choose 7x, 10x, 13, 15, 18, 20x. It is completely up to you. Now, to help you better understand what this means, say I decide to trade on a 20x leverage. If I enter into a trade, when Bitcoin goes up 1%, I'm not going to be making 1%. Instead, I'm going to be making a 20% gain because I did it on a 20x leverage. If I decide to do it on a 10x leverage and Bitcoin goes up 1%, then I made a 10% gain. In other words, you are gaining 10x or 15x or 20x the amount that you set it at. This is the part that I think most traders or people who discover trading on leverage don't understand, and it's that you could get your entire account wiped out if you are irresponsible with your trades. So the reward is significantly higher than just buying and holding Bitcoin, but it comes at a great cost and high risk. So the risk is that if Bitcoin decides to go down 1%, you're going to lose that X amount. So if I'm on a 10x leverage position and Bitcoin goes down 1%, then I'm automatically going to be down 10%. If I'm on a 20x leverage and Bitcoin goes down 1%, I'm going to be down 20%. So again, this is definitely a high risk, high reward play. So if you do something like a 2x or a 3x, it's definitely a lot safer than the 20x, but it still comes at a cost or risk. So let's just do a quick example, right? Let's say I decide to trade with 100% of my position and I decide to do a 20x leverage. Basically, now I'm trading with almost 2,000 USDT. That makes sense, right? I have 100 USDT in my account times 20, that's about 2,000, and that's the price over here. If I decide to select on 10x, it should be close to 1,000 USDT. I'm going to click on last to adjust my price to the current price, and I'm going to click on buy long. And cool, my order has now all been filled. One thing you need to know is that when you trade on leverage, you do not own your Bitcoin. So you can't just buy a 10x leverage position of Bitcoin and transfer 10x amount to another wallet. It doesn't work that way. When you trade on futures, you're trading a contract. You're basically, everything's written down on paper. And it's basically saying I'm borrowing X amount of Bitcoin to trade with. And if the trade goes against me, then I'm going to lose it. I'm going to go over everything down here. If you cannot see the same information, click on the hexagon next to the calculator, click on features, and make sure everything is highlighted, including the funding fees, take profit and loss, stop orders, advanced settings, index prices, everything. So right now I'm on a 10x leverage position. It's not going to say exactly 10x. It's going to be like 9.89. And currently I'm up 1.3%. Normally I would be up around 0.13%, but because I'm on a 10x leverage, the percentage gain is going to be higher. But again, it comes at a cost or risk. If you come down here, you will see something called the liquidation price. Liquidation price is at $18,271. That means that if Bitcoin decides to drop 9.57%, my entire position is going to be wiped out. In other words, my $100, 100 USDT that I had in my account is going to be gone. Whereas if you just bought and held Bitcoin on spot, you would only be down about 10%, which is a $10 loss, and you still have $90 remaining. Now, there is a way you can prevent liquidation, and that's by putting another limit order right above your liquidation price. So my liquidation price right now is at $18,271. I would probably do something like $18,300. So as Bitcoin is dropping in price, my order is going to get filled somewhere right around here above the liquidation price, and my liquidation price will actually decrease. Maybe it'll turn into something like 17.5K. So that's good. You don't lose your position, but you are still down. Now, the risk is that if Bitcoin just chooses to go lower because it's in a crazy downtrend, then you're going to incur a greater loss. So do you want to risk 100 USDT getting liquidated, or do you want to enter another 100 USDT and get $200 liquidated? Now, aside from that, if Bitcoin decides to play in your favor and it decides to go up 10%, that means that you have pretty much doubled your money if you are on a 10x leverage trade. If it goes up just 5% and you're on a 20x leverage trade, then you just doubled your account or your trading account. Now, I know some of you are thinking like, oh, Bitcoin will definitely go up 5%. It makes 5 to 10% moves on a regular basis. So going up back up to 21K, no problem. But the thing is, you don't know when that's going to happen. That can happen next week, next month, maybe even 2 months from now. What could end up happening if you build a position here? Bitcoin could drop, liquidate you, and then it could bounce back up to your desired price target. Also know that when you open up a trade, you're going to see this section over here that says realized PNL. I'm already down 58 cents, and that's because the longer you keep a futures or a leverage trade open, the more the fees are going to rack up. So these fees, you are going to have to pay them every day as long as you keep your position open. So for most traders, they like to scalp or day trade, and they only like to keep their leverage positions up for a few days, but no longer than like months or weeks, because that fee is going to be insane, especially if you trade with a large amount. Also note that the higher leverage you trade on, the higher these fees are going to be. The lower the leverage, the lower the fees. Now, you have two ways to close out your position. You have market and limit. If you're trading on leverage and you're an experienced trader, you should know the difference between the two, so I shouldn't be explaining it to you. I'm going to go ahead and click on limit, and let's just enter the current price of Bitcoin, 2188. And let's do the full amount, confirm. And now my position has been sold. Currently, I have around 98.8 USDT, and that's because of the fees. Now, the beauty of trading on futures is you can short the market. Now, shorting the market, you may have heard, but it's basically being able to make money when the market goes down. So let's go ahead and set one up so you have a better understanding. I'm going to click on last, which is the current price. Let's just do a 10x for an example. And let's do sell shorts. And now my position is open, but this time my liquidation price is actually 22.1K. So now my short position is open. So if Bitcoin decides to go down, let's say 2%, that means that on a 10x leverage, I'm going to be making 20%. So I'm making money on the way down. So in other words, you're betting that the market is going to go down. It's the same thing as going long, but in reverse. So your liquidation price is not going to be on the lower price ranges, but it's going to be at the higher price ranges at 22.1K for me. So if Bitcoin decides to go up 10%, my account or my position is going to get liquidated, in other words, wiped out. You can see that I'm currently down 1.6% because the Bitcoin price is going up. So you can lose money if Bitcoin is going up while you're in a short position. And that's the beauty of this market. It's a free market. People are allowed to bet if the market's going to go down or if the market's going to go up. They can long, they can short. It's completely up to you. But at the end of the day, know that you are responsible for your actions. So you can't ask for a refund. You can't ask to get your money back. It is all on you. Now I'm going to go ahead and do 2 more orders just to give you some perspective on the liquidations. I'm going to click on buy long on a 2x leverage. And 2x, again, is a lot less riskier than doing a 20x. My liquidation price is at $20,200. In other words, Bitcoin has to go down almost 50% for my entire position to get wiped out. My realized P&L is only going to be 10 cents fee, which is significantly less than the 50 cents that we had when we did a 10x leverage. Now, I know what some of you are thinking. You're probably like, oh, why don't I just buy Bitcoin on a 2x leverage all the time? Again, there is still risk. The fees can rack up, and you don't want your entire account to be tied up to contracts. You want to own your physical Bitcoin, transfer to a cold wallet instead of being all tied up. So again, trade with a small portion of your overall portfolio. Now let's open up a 20x leverage position at $20,171 buy long. Now that I opened up a 20x leverage position, my liquidation price is going to be very close to the current price. So if Bitcoin goes down 4.3%, I'm going to get liquidated. I'm almost down almost 1%. That means that Bitcoin went down only 0.05%, but because I'm on a 20x leverage long, I'm currently down around 1%. You can see that the fee is going to be a lot higher. Now, there are some ways you can manage your risks, but you will still take a loss. So right over here, you can see a section that says take profit and stop loss. Now, whether you want to set a stop loss or take profit, that's going to be completely up to you. It really depends on how much capital you have, like how much money you have on the side, or whether you want to take on greater risks, or what time frame you trade on, how long you plan on opening that trade. You just have to have a strategy before you enter a trade. But if you go ahead and click on it, let's say I want to take profit at $20,500. It's going to let me know that my profit is going to be around $30. You can also pre-select one of these if you wanted to. So let's say you wanted to make a 25% gain. It's going to automatically put in a price for you. If you want to make a 50% gain, 75, 100% gain, that means that Bitcoin has to reach $21,000. Let's say I want to take profits at 21.1K. The next thing I would do is create a stop loss, and I could do a stop loss right below the liquidation price. So my liquidation price is 19,264. Obviously, you can set it much higher, but let's say I set it at $19,300. So if Bitcoin decides to go down to $19,300, it's automatically going to close out my position. I'm going to be at around an $80 loss, and I'll still have around $20 left. So this is where you could decide beforehand how much risk you want to take. Let's say you want to just lose 25%. Well, the liquidation price is going to be a lot higher and you're going to lose less. So you lose $20 instead of the $80. Maybe you don't want to go more than 15%. So you're basically letting Kucoin know, hey, if I'm down 15%, just close the trade out for me. I don't want to take on any more risk. I'm okay with the $12 loss. I just feel like the trade is not going to go in my favor. The thing with stop losses is that sometimes it'll reach that price. It'll stop your position out or close your position out, and the market could reverse and go back up. It really depends, again, on whether you want to set stop losses or not, and it all comes from experience. Mostly for myself, I don't typically set stop losses just because I don't trade in these crazy high leverage. I like to stick within like the 3 to 5x leverage range. But even then, I would always have capital on side and add more to my position if I ever get close to my liquidation price. Now, just to share from my personal experience, I personally don't trade on leverage or futures as often as I used to back in 2019 and 2020. And that's because it takes a ton of time and a ton of energy. Some of you may understand what I'm talking about, but when you enter into this world, naturally what you'll do is you'll be glued to your phone or to your computer, and you're going to be monitoring prices like a hawk. And that is because there is a liquidation price, and you want to make sure that the market's not crashing or you're getting close to your liquidation price. And that could be very rude or distracting, or you may not be focused on the meetings that you're in with your friends, your family, or just being present with wherever you're at. You see, the life is not just about the markets and trading. So right now I'm in a position, it's $100, but it's not to an amount where I'm going to be stressed over and monitor my phone every day. Like, I can leave this position open, go away for a week and not even care about this. I believe personally that's how leverage trading should be treated. The issue that I have is people trading with their entire account. So for example, let's say someone has $10,000 in their savings account, they'll end up trading with all of that, lose it all. And that breaks my heart that people are willing to bet their entire life savings on trading and lose it. In my season of life, I prefer to spend more time with my businesses because that produces way more cash flow than trading would. If I was a full-time trader, that would be a completely different story, but I'm not, and I don't think I ever want to be. I enjoy doing it on the side. It's a fun hobby. You can make extra cash flow, money doing it. You could also lose some, of course. But two reasons why I wanted to make this video is because I wanted to give people who are trading on leverage or thinking about doing it a heads up, a warning on what they're getting themselves into. And the second reason is I understand that people who want to trade have a small capital, and I made 2 videos on day trading, making like $100 to $140 a day. I'll leave that video linked down below. And ever since those videos, I've gotten a lot of messages, people sharing like, hey Eddie, I don't have thousands of dollars to trade. I only have $10 to $50 to trade. How do I make money with that? And in most cases, I tell them you shouldn't be trading. You probably make more getting a job or a second job or picking up more hours. But trading on leverage gives people an opportunity, right? So if you just have $50 and you trade on 10x, it's as if you were trading with $500. But of course, there comes at a cost and risk, and you have to be fully aware of that. And again, you are fully responsible for your own actions. And there's a ton of videos on futures trading and margin trading and all that. So definitely do your own research afterwards. But trading on leverage does give the smaller investors and traders an opportunity to make more money if they trade well versus just buying Bitcoin on the spot market and just holding it. Well, with that said, hope you all enjoyed this video. If you did, please give it a big thumbs up. If you have any questions or comments, leave it down below. Feel free to message me on Instagram if you have any questions. Please be aware of all the fake accounts, and I'll see you guys in the next video over. Good night, good morning, adios.